gathered how to utilize multiple time frames to make better trading decisions. In this video, I'll break down the top-down analysis strategy, a proven technical strategy the pros use to predict market movements with confidence. I'm Victor Snow from Trading from the Soul, where smart money is simplified. If this helps, like and subscribe. What is the top-down analysis? Is when traders go to the higher time frames like the monthly and project thousands of pips into the future, and they move to the intraday like the 4-hour and find a trend in direction of that same monthly, and furthermore they go to the lower time frame like the 15 minutes or 5 minutes to trade in that same direction. This will totally increase your risk to reward ratio and your win rate. And how then are we going to choose the right time frame for our trading? Now I classify this way. Now my higher time frame, we have the monthly, weekly and daily. So my intraday, I have the 2-hour and the 4-hour. In my lower time frame, I have the 15 minutes and my 5 minutes. For me personally, from my higher time frame, I choose daily. My intraday, I use the 4-hour. Then for my lower time frame, I use the 15 minutes. Sometimes I even go further into looking at towards the 5 minutes. So this is gold daily time frame now, and this is trades that I took last year level here. Now let me go ahead and delete this chart and show you the same way I was able to use the same top-down analysis approach to trade this gold. Now once I come to my daily time frame, I ask myself, what is the story the market is telling me? What that simply means is I want to see how the current day actually close, so that I will be able to predict future daily candles. Now this is a single daily candle, this is a liquidity candle. So currently this is where we are at now. Number one thing I note from this candle that it closed bearish, and the momentum of the candle wasn't even strong. What I mean by momentum is how large a candle closes. Now this is a large momentum candle and this is a small momentum candle, guys. Again, if you look at this candle, this rated this range right here. Now range is difference between 2 points in the market. So here is the range here. Now this previous daily candle rated this range here. Now I want to point out the low of the range and the high of this candle that rated this range here. Now our current day couldn't break below this low of this candle's range. We could even call it an exhaustion candle. What I mean by an exhaustion candle is a candle formed at the end of a session. So if the next daily candle closes above this high, we will have buy days in a few coming days. But if the next daily candle closes below this low that rated this range here, now we will have more of the sales in few coming weeks, guys. Let's see what the market want to do for us. Can you see that the next daily candle closed below this low right here? Now it means that I expect sales in future weeks. What I will then do is I'll move to my 4-hour. What I look for is my trend. I will shrink my chart to understand what the market is telling me. Now from here you can see we are in an uptrend series, high to low, your high to low, your high to low, your high to low, taking out buy side liquidity, buy side liquidity, buy side liquidity. So this is what I mean now. Break of market structure. I've watched my videos about what a valid pullback is. Now you know that this is smart money trap laying for you here. Now this is, you normally that's a market structure. Why? Because of this thing is what the high of the week of this candle and the low of this week of the second candle. This next candle didn't sweep this low before what moving to the upside here. So we cannot classify this as what a pullback or a candle range. Currently we had what sales in the market, and market rejected off this low here after mitigation of this internal POI here. Now again we had a little more sales now breaking this low here now, and we can see market trading sideways for a little while here, something like a consolidation is before finally moving to the upside, breaking this range. So this is more of what we had here now, something like this here. And if you notice something I said about breaking of market structure, now I would point out my POIs in the market. So I broke this level was being broken. Now I started marking out my area of interest here now, which I had this first one, this second one. Again we have a third one right here, also a fourth one right here, guys. Using our idea of premium or discount, we're gonna be eliminating these two. We are left with this remaining extreme area of interest here now. So what I want is, I want price action to retrace from this level to this level and bounce off this level. Again, because of this level, this area of interest is a value one. We could see what a take out of this area of interest to mitigate this one and push price to the upside. And let's wait for the market. Okay, and we've mitigated this level. I want to ask you guys now, do you know why we are using this level here now? It's because of what our idea of mitigation. We can see a push here now. It came back here. So here is unmitigated. This push is unmitigated. Again, a push that rejected here. So here is unmitigated as well. So again, a push here, and what here is actually mitigated. Again, can you see another smart money trap I'm talking about here now? Can you see what our first candle, second candle, third candle wasn't able to sweep the low before making a break of market structure? I have videos dedicated to this in this channel. So here is unmitigated. What I want is what to have my interest signal. So market pushed up a little bit with this bullish candle, and next candle would push way above this candle here now. This that currently is happening in the market is what I call displacement. Displacement is when market comes and breaks the high of the candle that mitigated our area of interest here now. This is the candle that mitigated of our area of interest. Our candle came and broke the high of that candle. So this is a no displacement candle happening here. Can you see? This is the candle that mitigated our area of interest, and can you see next candles we weren't able to break the high of it. So until this high is being broken, we will not get our entry. You see, guys, in this scenario now, this guy was broken. So what I will do is what I will head on to my 15-minute time frame to look for what I can get from my 15 minutes time frame. The same thing here now. Also, the story the market is telling me now. You can see markets come to take out this low in the market, pushed up to take out this range with a low momentum candle right here now. Next candle push back a little bit to mitigate this extreme fair value gap before making a immediate macro break of market structure. We are not entering this level right here now. You always want market to mitigate your POI before you start looking for entry now. So everybody here now, market swept them out. This level was mitigated. Price action moved to have a market structure shift to change the bias of the 15 minutes, guys, right here now. So again, after this break of market structure, again the same thing we did from our 4 hour, we'll find our area of interest right here now, and to do that we can see a push exhaustion here now. Can you see here has been mitigated, leaving only where mark it out for me, this level right here now. So something like this here now. So what I'll do is I make my entry here, stop loss a little bit below here, and we're gonna be our take profit level, guys. We'll move to the 4 hour to get our take profit level. Initially we'll be targeting these highs right here, but if you check, we still have unmitigated zone here now. So it means that price action can push down to trigger our entry and move in our direction for a while, and finally come to take us out. Can you see? This is exactly what multi-time frame analysis helps you do. It allows you to see the bigger picture. So how are we going to take our profits using this now? The market is telling us here now. Since we know that here can be retested, what we'll do is still read the past to understand the future. Can you see that from this high to this low here now? So price action was can you tell me, in a downtrend? It means that we have a push exhaustion right here now. So what this means is that we have unmitigated area of interest up here, and again unmitigated area of interest right here that could serve as a potential market turning point. It means that rather than targeting this range, we will take our profits this level. So back to the 15 minutes, let's see what the market want to do for us. Okay, and guys, we are in the position, and can you see before we came back to this our entry now, we mitigated this 15 minutes POI. Why then do you think that price action will reject from this level right here? Because this level is a stronger zone. It is a 4-hour level. Just like something that weighs 150 kg will always be stronger than something that weighs what, a 30 kg. So we're gonna make our entry from here, stop loss below here, and we'll see how the market unfolds. Okay, can you guys see the push upwards with this large momentum candle? Okay guys, we made a small pullback before what price action move in our desired direction, and this is a 1:3.9 risk to reward ratio, guys. From the 4-hour time frame view here now, what if you head on to this trade, can you see we move way past this area of interest right here? So if you actually holding, you would have gotten at least a 10 RR right here. And what I suggest during this scenario is not hesitating at the entry of the area of interest, probably extend it to probably the extreme side of the supply zone here now. At least you could have gotten at least a 7 to 8 risk to reward ratio from this now. Again, from the 4-hour time frame, we can see that price action was after this push here now. It is a break of market structure right here now. What we expect price to do is continue moving in this uptrend movement to mitigate this area of interest, or what, make a small retracement or make a deep retracement that probably will take us out right here. And again guys, can you see we also have an imbalance here now? That means that we could also have a reaction from this imbalance right here now, which could reverse price to the downside. This is what I mean by a fair value gap and a non-fair value gap. This is the first candle and this is the third candle now. The high of the week of the first candle and the low of the week of the third candle. Can you see there is a gap between these two now? And a non-fair value gap is what, the high of the week of the first candle and the low of the week of the third candle. Can you see that if you mark it out, there is no gap between it? So it means that this guy doesn't have the imbalance here now. Why this is important is what, it is a liquidity level in the markets. The banks use this to trade from. And let's see what the market want to do for us, guys. Okay, can you guys see, after we mitigated this imbalance here now, we are having this large momentum downside candle happening, which pushed down rapidly. If you are still holding this position, took you out here. That's why marking all this, knowing these zones is very, very important in the market. Can you see how I know almost every place markets will react from, and still I don't even trade it? That is to tell you that you don't make money by catching every single move. This is what I teach in my academy, how to know the setups, the right setups to trade. So this push downwards now pushed us to this extreme area of interest right here now. Again, we'll be waiting for our area of interest, which is what, a displacement. What I want is, I want price action to come what and take out the high of this week that mitigated our area of interest. Let's see whether we'll have something like that. Okay, so all these things are inside candles right here now. This level have not been what, we've not broken any of this now. So what this simply means is that in the lower time frame here now, what we are having is a consolidation happening here now. Price action have not been able to signify an uptrend or what, a downtrend. Can you see why this displacement is very, very important for you? We want this high to be taken out, something like this. So if you have something like this in this scenario, to break this in back candle and not take out this high, this is wrong. This is what we actually need, this high. So let's see what the market will do for us. Okay, and finally we've gotten what we want. So we move to our 15 minutes time frame. So what we have here is what we can see, what, a break of market structure, taking out this sell side liquidity. Again, we have this break of market structure. Again, this break of market structure. Is this guy a break of market structure using what I previously explained to you? The answer is what? No, is not a break of market structure. This candle didn't sweep this in back candle before moving to the downside. What I mean is what, let me bring out this candle for you. This guy couldn't sweep this level before we made a break of market structure. If we had this could have been a valid pullback. What this means is that break of this level will be what, a fake change of character. We head on to my videos right here and we'll click on this. After this level was being broken now, what we'll do is what, let's select our demand zone again. We can see what, a push exhaustion, a push exhaustion, a push exhaustion, a push exhaustion, a push. And where is our unmitigated demand zone here now? We can see this level. And where is our unmitigated demand zone, guys? Answer for me. Good. We can see this level right here, guys. Where again? This level, guys. I'm gonna make my entry from here, my stop loss below here. Also an entry from here and also a stop loss from here will also be valid for you. And let's see what the market's gonna do. Okay, we are pushing down. Can you see price action is at our entry? Let me shift this. We are in the setup, guys. Price action could take us out to mitigate this extreme guy and go in our direction, or take us out completely by sweeping this low. Again, we'll wait for the same cycle to reoccur again. Let's see what the market want to do, guys. Can you see we are rejecting off this area of interest, guys? Looking out here, you can see this high here now could be a problem for us here. That's why we're going to be paying attention to these highs, guys. So from the 4-hour time, we're going to be our take profit level, guys, using the past to understand the future. Now you can see this unmitigated fair value gap before we push to the downside. Can you see after market to swept this high here now, we came again, some kind of an inducement break of market structure happening here now. So what we do, we target these highs, something like this. This will give you what, a 1:23 risk to reward ratio. This is one good thing about using the smart money multi-time frame analysis, this risk to reward ratio, guys. Let's see how the trade unfolds. So we are waiting for a reaction from here and we exit 50% of our position. I'm heading on from the 15 minutes view. Price action moved rapidly. When it got to this 15 minutes level, it moved first of all with a large momentum bullish candle. The next candle was a large momentum candle, breaking it, and the next candle broke it. No signs of rejection. This is why multi-time frame trading is important. This is a strategy that connects the dots for you. Let me tell you, the market is either your enemy or your ally, depending on whether you know how to read it properly. So many people think that the market is against them. Let me tell you, the market doesn't lie. It's a living, breathing thing with its own rhythm and pulse. Heading on, we are not taking out 50% of our position here now. From the 4-hour time frame scenario, you can see we retrace a little bit and we continue this our uptrend movement. So let's see what the markets want to do for us. Next few 4-hour candle, we can see that price action was trading to the right side here. We could have a breakdown of this range or a takeout of the buy side liquidity. Let's see what the markets want to do. And price action used a large momentum candle breaking above here, signifying the smart money involvement in this particular market. And currently we are running a 1:14 risk to reward ratio. Ideally, you don't have to have your trade running like this without closing some. It is ideal in this level to at least close 30 to 40% of your position, because if you can see, we have fair value gaps right here that could reverse price a little bit. There's a difference between a bed that is flying up and a bed you actually have in your hand. There's a difference between money running in your equity and money that is actually in your balance. The 15 minutes time frame, since this range have been broken, let's see whether market will give us another type of entry. Again, can you see after this break of market structure, we have this unmitigated area that price action could retrace back to if you want to sell a little while. I'm going to be making my entry here and let's see what the market want to do for us before finally getting to what our entry, guys. Can you see, guys, how price action came back to this level? Remember, we have a position running here now. Can you see why taking off some money is very important right here now? So recently I was trading a quote funded account. I moved it to 6RR equity and I didn't take it, but news came in and currently what took it down. I'm at break even. Can you see why taking off at least 50% is very important? Mitigating this level, this could be what a reversal. People that bought from this level, let's see, where will my stop loss be? My stop loss will not be below here because of we have this level right here now. These guys are the origin demand zones here now, so we're gonna be targeting the same take profit level as this one. Let's continue. Okay, we still continue moving up. Again, this level is also my concern in the market. What I'll do is I'll move to my 15 minutes time frame to see the reaction here now. There are people that actually would want to sell from here now, something like a consolidation, and currently we are running for this position 1:5.7 risk to reward ratio, and this position 1:12.8 risk to reward ratio. But remember, we've already taken out 50% of our position, so this is less. To protect ourselves, we'll move our stop loss towards break even. From the 4-hour time frame now, we are rejecting off this level, guys. Let's see what the market wanna do. Okay, market is getting a small momentum up again. Let's see. Okay, can you see market took out people that would want to sell from the market? Can you see market finally for the first time came to sweep this liquidity? Means that here have been taken out. In the future, we expect price action to continue going to the upside or have some kind of small retracement. Okay, finally we pushed, guys, and finally we've gotten to this level. Something that started from here to this level. I'll definitely take out my position right here. I don't have to necessarily wait for it to come to exactly this level here. I'll take out what this will be my take profit level, guys, making it this one around for 1:10 risk to reward ratio, and this one around for 1:22 risk to reward ratio, which we actually exited the first part. 1:22 is what 50%, which is actually 10 RR, which is total giving us what a 32 RR trade, guys. So again, can you see we also have this our zone right here now, and can you see when market finally moved up to, can you see pushed up for a while to mitigate this zone, we had started having sells in the markets here now. Price action could what push off to take these guys out to mitigate this extreme POI, or you can go actually lower. Can you see that each time frame tells us a different story? This is exactly what multi-time frame trading does. It allows you to see what the bigger picture, allows you to spend time with the market across what multiple lenses. Ignoring this is like trying to guess the ending of a movie by watching only the middle. Sure, you can get the general idea, but you miss out the real story. Let me tell you this today: you are the average of the 5 people you spend the most time with. But what if you spend time with the market itself? Imagine what it will do to your trading account. Price action could retrace below here now deeper before hitting this level. I'll talk about this in the second part of this video. So like and subscribe to this channel if this helps. And besides, you don't want to miss out on this video once it comes out. So link to my academy that I was talking about will be at this video's description. And also, if you're struggling with trading, I'll also be dropping a 3-day free trading course for what it takes to actually be a successful trader. I will see you guys there.